It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today is the smartest guy in the room, Michael Becker.
Hey, Paul.
Michael, who owns with his group 4,800 units in the Dallas-Fort Worth market, was a banker for 14 years before he got into owning investment properties. I mean, he has done a great job. And I think he's the right person to ask for what's going on in the marketplace these days. So the question that came up is, Michael, how do you select a property manager, and when in the process do you engage the property manager?
We've talked about this and said this before. Property management really is kind of probably the most important thing. It'll be kind of make or break your deal after kind of the site selection and property selection. So once you own it, really your property manager is going to make it go or not go. So that's very, very critical part of this whole business. So when do you select, and how do you select a property management company? Before you're really getting into it, I would certainly go out and make sure you target. So if you're going to go in and buy C-class property in a certain suburban market or urban core, or wherever you want to target your part of your town, go kind of start. What I would do is look at all the other properties and then kind of general type of locations that you want to buy. Find out who manages those deals. And then just start with the ones that look like they're performing the best, kind of really clean properties. And I would start kind of try to figure out who manages all these properties. And that's where I would start. And then you start interviewing those management companies. I would interview 2 or 3 of them, really kind of make sure you go to their office, explain to them what you're doing, what your plans are, and really kind of establish, who you want to kind of work on the front end. And make sure you interview multiple of them so you get a sense, because you might not get a good vibe, or this person might be overwhelmed, or they don't take you seriously. You really need to have a basic plan of who you want to have manage these properties before you really start spending a ton of time going to offer on these deals. So if you're not here and you don't know us in Dallas-Fort Worth and you're part of the country, that's what I would do if I was trying to look at it. And then when do you engage them in the process? So as you're going through and looking at these properties, I would, if they're willing to, I would try to communicate with them on a pretty frequent basis, especially when you're targeting properties, saying, hey, Mr. Manager Company, I'm looking at buying this type of property in this property in this location. Do you like this location? Maybe it'll give you some basic high-level feedback. If they like the location, the general asset, most of these property management companies know all these other properties in town. They're either the comp for something that they manage, or they've seen it on the market. A lot of them follow what's on the market as well, because they have a lot of their clients bidding on these properties anymore. So that'd be that. And then once you go through, do your analysis toward the deal, you make an offer. When you kind of get your LOI kind of selected in the best and final phase, then I think at that point is when you really kind of go to your management company and ask them to kind of give you a more detailed budget on these deals. You don't really want to, it's when you're offering, if you go kind of wear your property management company out and ask them to do budgets and all these deals that you haven't even gotten to the point where you're selected in the best and final round, you get a little bit closer, a little bit more serious, you're going to kind of wear your property management company out. So wait until you get to the point. You should have some kind of general rules of thumb on how to underwrite these deals. If you don't know how to underwrite an apartment complex, you need to stop what you're doing and go get some basic level of education. Listening to podcasts is a good place to do, but also joining like a local mentoring club, reading books, things like going to local real estate investing clubs. Those are things you do to go get educated on the process. And then once you kind of get selected, that's when you really have them spend a little bit more time and get a detailed management budget, and make sure that you maybe even go tour the property with you, take a look at it, make sure they kind of point out some physical issues on it. That'd be really when you spend a bunch of their time. These are all relationships. Everyone has a certain amount of time in their day, so you don't want to wear them out too early on. But once you start getting serious about it, that's an appropriate point when you ask them to do a budget and go tour the property with you.
Talk about scale, Mike, because, at what period of time should you have a property management company? We continue to bang the table on property management companies, but if it's a 16, 20, 30, 40, 50 unit building, what period of time does it make economic sense, do you think?
I would think as much as you can, I would always try to err on the side of getting a property management company, even if it's a relatively small property, 20 units or 15, 16 units. If you have a single family house or a quadplex or something like that's one thing. But getting these things, there's a big difference between operating an apartment complex, even on a small scale, than a single family house. You get on a whole different radar screen with the city For example, that's a lot of something that people don't think about. When you own like a little house, the city pretty much just leaves you alone. You know, an apartment complex, the city does multifamily license on an annual basis. They come do property inspections, especially if you don't live in the location where you own your property and you're not on site. It's really hard to kind of manage all that. And if you don't have a professional staff to deal with the city, deal with the tenants, do turnover, make ready, it's challenging. So this business, bigger is generally better. But if you're starting off small, you know, you have a property management company that's going to manage it from off site. Once you start getting up 60, 70, 80 units, you typically can afford to have an on-site full-time manager and on-time full-time maintenance guy to kind of manage the property and run it and do the make readies and fix any sort of like work orders. So that's kind of generally rule of thumb. But I'm a big proponent of having a management company pretty much on almost any size property, Paul.
You know, in some of these deals where it's ready, aim, fire type of stuff, sometimes ownership groups that are buying these properties have it backwards, that they kind of execute an LOI before they've actually done the analysis on the property and make sure that it does work. I was on a property last week with an investor, and let's say it was the middle of last week. They had already signed up to do the deal, and they were going through inspections, and they're about to go with $150,000 hard on beginning of next week. And I was like, you know, doing my checklist in my head when I'm talking with them. Now, do you have your pro forma, what the management company has given to you? Well, we haven't chosen a management company yet. I said, how many doors is it? 250 doors.
Yeah.
And you don't have a management company walking these units with you, and they haven't built a budget for you, and they haven't done a pro forma on how this property is going to work after we give you the keys to the property to kind of figure out if you can execute your plan. They said no. So they've had to hustle and talk with a couple property management companies to make sure that they're doing it right, that they're buying the property at the right price, and that they can execute their plan after they own the property. So we don't want to see them risk $150,000 without doing the back of the napkin, making sure that this thing does work. So engage a property management company as soon as possible, and especially if you're going hard with money. And again, apartments are significant numbers, whether it's $50,000, $75,000, $150,000. Making sure you either share it with us or share it with the property management company about what's going on and what the risks are of doing this transaction. Anything more, Michael?
No, that's really good advice, Paul. I mean, I think the management companies make or break these deals, and it's kind of the fine line you walk. So you got to make sure you know, when I'm looking at which company to hire, you got to make sure that they manage that type of property, they have experience in that submarket. You don't want to hire like a Class A apartment manager to manage a C-class property. That's not a good fit.
And then pay these people. Don't go on the cheap. You know, it's got to make sense. This is the most important person in this relationship. I mean, we like you as the multifamily manager of the property. You're the asset manager, but we definitely love the property manager. That's going to make or break your transaction. So pay these people. Find a way that you're on both sides of the fence.
Yeah, one little side tangent. One of the things I've been seeing with some of the people that we interact with, make some loans for. Sometimes they've been going in and winning these deals and hiring a management company because they're going to give them a budget that has a really extremely low payroll number, and then they get in their property and 6 months later they're not hitting their pro forma rental rates. And the reason they're not doing it is because they have staffing issues, because they have the lowest quality staff that can bare minimum just get by. So if you buy these deals, you make sure that the payroll has been a big pressure here lately on most properties, especially on the maintenance side. So if you're coming in, you're squeezing every dollar out of this deal by underwriting really low payroll number, just know you're going to get what you pay for in these things. So you need to make sure that your property and your pro forma and the price you're paying has enough money in that budget to pay for adequate staff, or you're just not going to be able to push revenue. So that's just something I've kind of seen a few times here recently that you just reminded me of, Paul.
Well, as a banker for 34 years with me and 14 years with you, we've seen a lot of problems, and we just want to advise people to not run into problems that we have seen in the past. You and the apartment ownership side, I mean, you have 275 investors that have put money with you to buy apartment buildings. If someone wanted to build a relationship with you, Mike, to kind of figure out a little bit more about what you guys do, what's the best way of getting a hold of you?
Yeah, the easiest way to find us is really just going to our website, which is www.spiadvisor.com. That's SPI like spyadvisor.com. There's a bunch of information about us and our team on the website, as well as we have like a contact form. So you go to the contact form and fill that out with your name, email, and phone number, and we'll give you some more information and potentially even set up a call with me, kind of go over and start get to know you a little bit over a telephone call. So that'd be the best way of reaching out to us, Paul.
That's great. Or you can meet Michael Becker at the Old Capital Conference on October the 5th, Addison Convention Center.
It's coming soon.
Just focusing on B and C apartment complexes and how people run the properties, how they're sold. Just some great information about that. I mean, there's a lot of conferences out there, and they are mostly for A-class institutional buying conferences, and a lot of people go to that. But I have no idea how those properties make money unless you're a real estate investment trust. And I mean, that's not the stuff that we finance or Michael buys. Michael does, what would you call that? Workforce housing, Michael?
Yeah. So most of the stuff that we loan on here at Old Capital is just the workforce housing. So kind of Class C, maybe Class B. What my company does, we focus on kind of the upper end of the workforce housing scale. So, kind of B to maybe A minus, really. So kind of think mid 80s to mid aughts in your construction. So like 85 to 05 kind of is what we look for. Something that's, materially lower in a monthly rental rate than what the brand new construction is that they're building right now.
Absolutely. So you'll have a chance to meet Michael Becker, the smartest guy in the room at the conference. If you do want to get to the conference, it's going to require a ticket. It's going to require some money, not a lot of money. But go onto the Old Capital Podcast website, Old Capital Podcast website. There you can register for the conference. You can kind of see a little bit about what we're going to talk about. Also, too, there's a place on that website that if you want to ask Mike a question for Ask Mike Mondays, we're always taking questions. We get a lot of questions that come in, and we try to choose the one that has the greatest impact for everybody to listen to. So if you have a question, make sure you ask Mike for next Monday. So what else is going on, Michael?
That's really it. It's also at oldcapitalpodcast.com. You can find some information, get the Old Capital white paper, kind of the multifamily finance 101, the basic block and tackling of how these transactions get put together there, as well as a sample due diligence checklist. So if you want to find the type of diligence information that we ask for when we're putting LOIs in, the actual checklist that we use is on that website too.
Great information. That was Michael Becker. I'm Paul Peebles. Have a great day.